The markets have been really volatile. It's very important that you keep your eye on what the VIX is doing day by day. Now, a lot of investors just put their money into stocks, bonds, commodities, and crypto and then just walk away. This would be like a farmer just planting some seeds and then saying, I'm not watering these. I don't care if the weeds overgrow my fields. I'm just gonna go on holiday. Farmers don't do it, and we shouldn't do it either. Now, this particular signal getting thrown by the markets is very important. In this video, I'll explain what you need to look at next and where the markets could be going. Let's run the numbers. The reason that we look at the VIX is simply because we want to get an independent assessment of what is happening in the world. The VIX will register the news. You don't have to really worry too much about the news, as a lot of people do. They stress, what's going to happen tomorrow? Is the Fed going to cut interest rates? Is it going to follow the ECB? Is President Trump going to get rid of Jerome Powell? All these are pretty entertaining things to look at. But when it comes to price action, guess what? The charts are your friend. Happy Easter, everyone! In this video, we're going to go through the cheat sheet in terms of focusing in on row 1, the VIX, as well as row 3, the S&P 500, the NASDAQ, the Dow, and the Russell. We're getting some very, very interesting signals, especially from the Russell at the current time. You need to keep aware of this. And then we're going to cross-triangulate that against Bitcoin and total crypto market cap. We'll also have a look at the paths on gold. It's shaping up to be a really interesting time in markets. You don't want to miss this, and make sure that you watch all the way to the end. I'm going to give you a specific figure on Bitcoin that will be a game changer. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome, and welcome back, CTKS family. My goal is to help you to be more of a financial and emotional blessing to yourself and those you love. My goal is to teach you how the markets actually work. If you just listen to the headlines, you'll go running and screaming in terror, or you'll get into the markets in extreme greed. Both of them will slice your account into 1,000 pieces. Always remember that markets, news, financial news, if it bleeds, it leads. The real key is that you don't bleed along with it. In order not to do that, you need to learn how to read the charts, intercorrelation, interconnection, CTKS structure, emotional management. Those 4 pillars are your key to success. Okay, let's get into it. If you listen to Main Street influencers, they will not talk about intercorrelation and interconnection. Why? Because this would empower you to make your own decisions. For example, when we look at the NASDAQ Composite Index against the VIX, what are we seeing? Well, basically, what we see is the NASDAQ moves inversely with the VIX. Now, what does this mean? It means basically, if the VIX comes up, guess what the NASDAQ comp is doing? It's going down. And if the NASDAQ is going down, what do you think is happening to the S&P 500? Well, it's going down as well. So you can see it from an uninverted stance. When the VIX starts to turn around to go up, you can expect the stock market to sell off. So therefore, looking at this particular chart is really important. And you might say, but Ken, I'm not inside the stock market, I'm only in crypto. That makes the VIX even more important to look at. Let's overlay Bitcoin here. Okay, Bitcoin overlaid across the VIX. Now, what does it mean? Again, it's this kind of relationship can be a little bit tricky to look at. So let's just invert the scale. What you can see is when the VIX goes down, inverted Bitcoin is going down, and I'll explain this in a tick. As the VIX goes up, inverted Bitcoin is going up. Inverted Bitcoin is a bit of a problem when it relates to the VIX, because if it's inverted, guess what? It's actually going the other way. How do we check this out? Well, let's uninvert the scale, and what do we see here? VIX going down, Bitcoin going up, but VIX basing out, Bitcoin topping, VIX going up, Bitcoin coming down. And remember, when Bitcoin comes down, the alts absolutely bleed. And what have we seen recently? The VIX was coming down and Bitcoin was going up. And we said that we needed to watch this particular area, because guess what? If the VIX came up again, guess what was going to happen to Bitcoin stocks and your favorite alts? They were going to come down. But what we've seen here is some really constructive good news. If we were thinking that the VIX was about to take off, we would have seen this kind of action. Instead, we've seen this kind of action, which puts us in two states. Either the VIX is going to consolidate and just get bumpy up and down like this, or it's going to do what we dream of. It's going to come down. Now, if it comes down, we're going to see broad-based rallies everywhere. The major risk when it comes to reading the news is simply making emotionally based decisions based on fear or greed. Fear and greed-based decisions typically lead to impulsive decisions which lead to losses. You'll hear time and time again that the markets don't like uncertainty. Actually, that's not the truth. The markets love uncertainty. That's where you make the most profit. It's us who don't like uncertainty, not the markets. Now, how do you get certainty? You look at the cheat sheet. The cheat sheet is comprised of 7 rows and is available absolutely free of charge from ctksmethod.org. Row 1 and Row 2 measure risk on or risk off sentiment. Row 3 and Row 4 measure the stock market, and Row 5 through to Row 7 measure the new economy of money, the crypto market. Now, a lot of people stuck inside Row 3 and Row 4 don't want anything to do with this newfangled digital money. After all, money is printed and therefore tangible. No, it's not. 5 years ago, some analysis was done on the money supply. So the money supply is a lot bigger than what it was back then, 5 years ago. And what they found out 5 years ago, 93% of the money supply was intangible. That is not physical. Only 7% was physical. Now, just remember, this was 5 years ago. What we're likely to be looking at now is about 1% of the money supply is physical, as in notes, banknotes, coins. So if you've got a bit of significant money inside the bank and you say, give me cash, they'll say, give me a couple of days to organize it. It's just not there. Therefore, you can see there's a reason behind Bitcoin and the crypto alts. Literally, money is printed out of thin air. And please, don't get me started on the fractional reserve banking system. If you're curious, look it up. The markets literally change on a per second basis. You've got to be flexible. You don't want a fixed mindset. So what we do, especially inside the methodology, is that we look at price paths, one up, one neutral, and one down. Now, why do we do this, and how does it help you to be a better investor and trader? This is a price path on US oil taken from inside the service. And what you can see, that oil is currently trading at 63.68. And we saw a lot of negativity as President Trump was doing the tariffs. The whole world went into turmoil. But it is very likely that we can get a revision or mean reversion to these price paths. And that's what we're seeing currently with oil. Does it mean it's all over, everything is good? Not quite. Not yet. Looking at gold on the daily basis, we can see that gold has been following the normalized positive price path. And the reason that we do these paths is we need to know, is a particular chart strengthening? Is it weakening? Is it rebounding? Is it finding structure, or is it decaying? What it actually means is when gold goes up, there's geopolitical uncertainty. And what the paths create is a degree of understanding as to where price will go under normalized price conditions. It's far better than saying, I don't know where the hell this thing is going and it could drop, and it could drop to zero. No, it's going to obey structure sooner or later. It's very important to have a neutral mindset. Just look at intercorrelation and interconnection, and especially structure. Structure is vitally important. For example, when we look across the S&P 500 and look at Bitcoin, we know these kind of movements in both stocks and commodities and crypto are caused by the VIX. Now, what was the VIX doing here? It was spiking up. What was it doing here? i.e., what was the VIX doing? It was coming down. Now, what was it doing here? The VIX was going up. What was the VIX doing here? It was coming down. Now, what you need to be aware of is structure is in fact everything. I've only talked about intercorrelation and interconnection, and you might think, they're the two hidden secrets of the universe inside financial markets. Well, they're pretty important, but structure is the bomb. You need to understand structure. Now, why? When we were here, we were thinking, okay, the VIX is looking like it could put a leg up, and it did so. And what did that do to the S&P 500? It dropped it down to the next level of structural support. And we can see structural support is holding fast for the S&P 500. Now, what if this structural support wasn't there? It could mean that the S&P, when it dropped, could actually land down here. And that has huge ramifications for your investments and your trades. Emotional management and emotional control are vitally important. When we look at the Dow Jones, we saw a lot of weakness in the Dow in the past trading session. Why was that? Remember what the S&P was doing. It was at structure. What did the Dow come down to? It came down to structure. In other words, we already knew that the Dow was in trouble because it wasn't at structure. It hadn't found a base yet. Smart money wasn't coming in to buy the Dow in the past trading session. It's doing so now. That's why you get differentials between different major market indices. Now we're seeing something really interesting. This blue line, of course, is Bitcoin. Now we're going to come back to that. Looking at the major market indexes is really important. It took me years to figure this out, and I did a finance degree at university. They don't teach you a lot of stuff that they actually need to teach you, and they do not teach structure, which is a very, very big problem. Intercorrelation, interconnection, Now, what we can see in the NASDAQ, that blue line is Bitcoin. Of course, it's directionally correlated. And what we saw in the past trading session is we leveled out. Now, looking at the VIX, this is the kind of thing that we would want to see. We're sitting on an area of structural support at the current time. One of these things, what are these things called anyway? They're called SCs or Stanfield zones. Now, the thicker the SE is, the more structure is underneath it. But the key is the strength of the individual structural levels varies, and you can't tell it by an SC. You can only tell it by structure. We'll look into Bitcoin a little bit later on, but I'm just trying to give you a painted picture of what the markets are currently doing. And we've seen that the VIX didn't break to the upside. It actually broke down to the downside. If it continues, we're actually going to find structural support here because we're on structural support, and we're going to rally up. Now, we can also see that there's a lot of structure underneath the NASDAQ. So even if we get a bit of a bump up in the VIX, which will bring the NASDAQ down, the S&P 500 down, Bitcoin down, the Dow down, you got the idea, it's not going to come down too far. Therefore, what does this mean? You need to look at the gaps. You need to focus primarily on where CTKS gaps actually reside. One of the problems that we get into when we see negative price action, it's very easy to get very, very negative in your mindset. And when you see positive price action, it's very easy to get positive. Now, this is just baked into our psyches, our collective brain wiring. So you must unwire your mind. Now, how do you do that? You need to look at intercorrelation, interconnection, Just be aware of what the news stories are, but don't buy into it too much, because if it bleeds, it leads. Instead, let structure and gaps be your guide. When we look at the Russell 2000, which is the small cap index, we're starting to see signs of life. We're also seeing a lot of underpinning structure and a good amount of structural support under the current price with a positive CTKS gap. Now, what does this mean and how does it relate to Bitcoin? I'm going to show you a chart that you just can't unsee. Okay, here's the chart, and we look at it a lot. Now, remember that I've been talking about the Russell 2000 as being a really good indicator for Bitcoin. Look at this, the S&P 500 is coming down, and also the NASDAQ is coming down, the Dow is coming down, but the Russell is going up. Which direction is Bitcoin going? It's going up. Now, this directional momentum inside the major market indexes is getting felt by Bitcoin, and this is something that you need to understand. They all work as one. I'm just going to zoom into these four charts, just like this. You can see the S&P 500 is heading downwards. The NASDAQ heading downwards, the Dow definitely heading downwards. Now you know why it headed downwards. It was a structural issue inside the Dow chart. CTKS structure is so incredibly powerful. And when it comes to understanding intercorrelation and interconnection, we can see that the Russell 2000 is getting close to doing a breakout. Therefore, we are cautiously optimistic that at least across the weekend, we're going to see some positive action, and across the break, and a happy Easter everyone, we're going to see some potential positive price action. Now, of course, we're mindful of what these stack probabilities are telling us, and we just need to be aware of how all the different charts intercorrelate and interconnect. The right question is, are we out of the woods yet? And the answer is no, not yet, unfortunately. We are finding a level of structure in here, and the charts do favor a bit of a positive kick up, especially if we get follow through, but we must have that three-dimensional thinking. We cannot let fear be our guide. Fear and profits are inversely correlated. Now, what does that mean? If you've got heaps of fear, guess what your profits are doing? And guess what your losses are doing? A lot of times people don't realize that a loss has a hidden lesson in it. You paid a tuition fee into the market, and it's got to do with your emotion, first and foremost. Second, losses are related to a lack of knowledge. So you need to get your knowledge up. You need to learn, especially you must know what the structure is. Intercorrelation and interconnection are mandatory. Another thing that people do, they basically say, oh, I'm an investor. I'll just be like a farmer. I'm going to throw my seeds into the field. I won't even till the soil. I'll just throw them randomly into some nearby field. I maybe don't even own that field. And then I'll just come back and I'll have a beautiful harvest. But I won't do anything to look after it. Hey, come on, you know that's not going to work. You have to work for what you get. Just like you work for the money that you got, you have to work to keep your money and to grow your money. And of course, a lot of people say, well, Ken, all the scammers out there say that I can just sit on a beach and I can do copy trading and I can do all of these things and it involves no effort because after all, I've got Netflix to watch. Ah, come on, get with the program. The only people that benefit from that are scammers. Scammers will always tell you everything is easy, you don't have to worry about anything, things are guaranteed, and you'll get a regular payment. If you hear anything like that, run like hell. Because they're talking about themselves, not you. All right, back into it. Now, what do we see here? Bitcoin is putting in a very valiant effort. Is it at a point where it can just take off like a rocket? You know, that kind of language that all these influencers say, oh, only up, the bottom is in, it'll never be below this price. Again, oh my God, what absolute and utter rubbish. Why are you listening to these people? You're just going to get crushed. Just think about it like this. You are a farmer. You go out and you till the soil, you get the right fertilizer, you get the right seeds, you plant your crop, and then you look after it. You don't just listen to people who say, oh, just throw a random number of seeds into that field and you're going to have $1 million crop. It doesn't work that way. Oh, but you know, financial markets are different, Ken. Yeah, I've heard it does. Oh my God. I've been in the markets for nearly 4 decades. I can say that is not the case. The markets are just like anything else. They're just like the sport that you love. You have to put in the effort. Deep down, everybody knows this. A very important question, what the heck is going on up here? Now the answer is only one word, structure. Let's check it out. Okay, zooming into Bitcoin. Now I'm on a 15-minute and that's all of these particular spikes going up. We need to look at the structure. Now, what is the structure? What is the key level? And if you've been following the channel across the past 4 days, you already know it's 85,728. So to get repair on Bitcoin and to have a bullish price move, we must, absolutely must, it's mandatory, get above the 85,728 level. That is a non-negotiable. Remember, all your favorite influencers, they're really fun, they're great guys, they're great gals, they want to entertain you, but realistically, financial markets are not about entertainment. They're about you being more of a financial and emotional blessing to yourself and those you love. What is the way that you get there? Well, it's to take responsibility for yourself. You need to learn how to read the charts independently of other people, and that's what I teach. So going back to these spikes, we can see that 85,728 level has been a nightmare for Bitcoin. It's doing structural failure after structural failure after structural failure. SF there, SF there, SF there, structural failure. I'm not swearing or anything. SF there, structural failure there, structural failure, structural failure, structural failure. You can see this level is incredibly important. I can't overestimate it enough. 85,728 is your line in the sand. One thing you should be aware of, especially across the Easter break when the markets are closed, markets tend to trade in a flat sideways direction across market conditions like this. Now, that doesn't mean that they can't break out. They can. They can break out to the upside or to the downside. But literally 90% of the time, you're looking at a ranging situation. Now, when you do the CTKS method, you love ranges because you can go in heavier and harder there because the upside and downside volatility is lower. But you must manage your positions as well. And of course, if you're a CTKS student, you already understand you can't just look at Bitcoin to understand where Bitcoin is going. That's a bit of a mind mess up, isn't it? A lot of people just look at Bitcoin's chart and they say with extreme confidence, I know exactly where Bitcoin is going because I looked at Bitcoin's chart. Okay, fair enough, but it doesn't work. Now, what are we looking at? In this particular case, we're looking at total crypto market cap. Now, total crypto market cap came up to that Bitcoin structural overhead resistance, and it's been rejecting it. But you can see there's a little bit of a different pattern playing in at the current time. Structural resistance was around here for Bitcoin, which was around that 2.67. And the actual structural resistance across the entire crypto market was actually $2.69 trillion. Now, what we talked about with Bitcoin is that we need to get above a specific figure. I'm going to go back to Bitcoin's chart. That specific figure was 85,728. Now you notice in the tails here, in the spikes here, total crypto market cap is different. It's much more uniform. It's trying to head up to this $2.69 trillion mark. So in terms of the entire crypto market cap, we need to get above 2.69 trillion. And I wish it was a positive CTKS gap and there was no overhead structural resistance, but we can see that's just not the case. This further reinforces potential positive upside consolidation price action for the next couple of days. Now, unfortunately, not a lot of people look at total crypto market cap. So that's why I've given you the 85,728 figure to look at. I have been talking about it for quite a few days, but it's now more than ever vitally important for Bitcoin to just shoot above there, and it realistically needs to get higher to take out that $2.69 trillion structural resistance on total. Just be aware, that's the upside, and the upside is favored for the next couple of days. But just be aware that price is always moving in a wave. Even if it goes positive, it doesn't mean it can't come down, can't go up, can't come down, can't go up, come down, go up. You got the idea? It is always the same. Price is always moving in a wave. You've got to get used to this. You're just like a sailor. You don't get in your rowboat or sailboat and go onto the ocean and say, it must be just calm and flat and no waves. Why? Because the waves live in the ocean. That's their home. Don't evict them. That's where they belong. And waves live inside financial markets as well. So, two things to just bear in mind. This 85,728, of course, it's wildly important. Be a farmer that throws the seeds into the market and then tends to those seeds, looking after them, watering them, understanding. The price is just moving in a wave between CTKS structural levels. This is it. This is how the markets work. Now, how do you interpret these levels? If you've done the standard certification, you already know, but if you're new to the community, a very warm welcome to you. What you do is that you use these as the world's only leading indicator of price action. These are literally gravitational areas where price will come down and get attracted to it. Now, all of the buyers exist in levels below the current price. So there's buyers at the 84,591 level and the 83,855 level, and also down here at 81,892. You're like literally a safari person. You're looking at price like a wild animal. It's going between fences. The fences are CTKS levels. So I've thrown about enough analogies at you. I've thrown the farmer analogy, the sailor analogy, and the safari analogy. They're all good. So the key is to just combine all those analogies into one mega analogy. Please let me know what that would be inside the comments. I just love reading the comments each and every day. We have such an awesome global family. It's just an absolute honor and a pleasure to be here sharing this time with you all. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.